Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever time zone you are tuning in from. As always, I'm very excited to welcome you all to yet another promising edition of the Forex Morning Mastery. In fact, this is our first edition for the week, and Happy New Week to everyone. And I do hope you all had a fantastic weekend out there. Good morning to you. I see you, Sahajilan. Good morning to you too. Glad to have you around with us. Is this your first time with us, Hajlan? Please let me know in the comment section. I'm always excited to have newcomers in the house. So, last week was quite interesting for us all. We had the US Oil, which did very well last week, where we joined that significant move to the upside. The same thing with the GBPUSD and as well with the XAUUSD. So we are hoping to replicate the performance we had during the course of last week again this week. And in preparation for this week, we are going to be looking at the same three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course my favorite amongst them, which is the XAUUSD. And I already done a top-down analysis on two of these financial instruments, that is the GBPUSD and the XAUUSD. And for those of you who are with me on all my social media platforms, you definitely must have gotten an update as regards to that and how what we intend to ride the momentum again this week. And of course, I also shared some commentary this morning, which gave us an update on how we will be positioning ourselves for the next move, but we are going to be expatiating on that during the course of the session. So I encourage us all to stay tuned in, as we do have very insightful ideas that will be guiding our trading decisions for today. And the US All Spot, which I did not share publicly, we are going to be doing a top-down analysis on the US All Spot today, so that it gives you the privilege to see how I actually run my technical analysis from the higher time frame and how we use the fundamental factors behind the scenes to in conjunction with the price action technical analysis to position ourselves for the next move. And for those of you who are joining us for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we really do here on the Forex Morning Mastery? Well, as technical traders, we gather here every day, coming together as, no, not every day, 3 times in a week. It was formerly every day, but we streamlined it to 3 times in a week. That is Mondays, Wednesdays, and of course Fridays. So we come together as a community and engage in follow-ups and reviews of our current trading positions on these assets I shared during the weekend. So I share a couple of videos during the weekend, giving you an idea into what my plans are for the new week. And during the Forex Morning Master, we come here to do follow-up details on those videos. And it's important for me to also emphasize that this is not a signal service platform, but instead an avenue where we all come together to have a deep insight into the behavioral patterns of market participants, and using that historical data to strategically position ourselves for the next move. So it's more like an educational platform in conjunction with real life trading opportunities as well. So our aim here is to equip ourselves with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach and eventually use that information to enhance your own trading decisions. So once again, I do welcome you on board and encourage you to actively engage in the comment section. You can ask me anything that has to do with financial matters, of course, the financial market, and I'm here and willing to be of help in that regard. And if you have found this content helpful and useful in making your independent trading decision, I will greatly appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and it also serves as a utility that helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. And thank you very much as you do so. I see you, John Alabi. Good morning to you. Glad to have you around with us. Ajlan says, yes, this is my first time on live, but I follow. Oh, that's amazing. Glad to have you around with us today, and I look forward to seeing more of you, Ajlan. And C40, as always, good morning to you. Glad to have you around with us this morning. So, with that being said here, we will be diving right into the business. And as always, the first thing we normally do in this community is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today and of course for the remainder part of the week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and most importantly timing to position ourselves in such a way that we can capitalize on any potential move prior, during and even after this economic event. Now, based on the asset we are looking at for this week, we will be focusing on the economic features from both the United States and the United Kingdom economic docket. And in fact, we usually focus on high impactful event. However, in days like this, when we do not have any high impactful event, we streamline our options to mid-tier economic features so that we can have a broader view into what market participants are looking at to decide if they are going to be buying or selling the assets we are looking at. Now, for today, Monday, June 24th, we do not have any high impactful event. In fact, for the first half of the week, we are not seeing any high impactful event until Wednesday. And while that is happening, we will be focusing on mid-tier economic features. And the mid-tier economic features we are seeing here comprises majority of Federal Reserve official speeches, which is one thing that we also want to be looking at, as it will be giving us an insight and clue into the potential monetary policy trajectory of the Federal Reserve. Remember, a lot of things have happened lately, from not too impressive data in the last couple of weeks from the United States to a surprising US PMI data that came in on Friday, hereby inciting the idea that we might likely be seeing interest rate cuts anytime soon due to the resurgence of potential inflation in the United States economy. So at this point in time, it's very important for majority in the market to listen to what the Federal Reserve officials will be saying to have an insight into this. Now, for today, Monday, June 24, we have a couple of speeches from Fed officials. One has already happened this morning, though I'm yet to have an highlight into what Wallace said this morning, but I will definitely be giving you updates in our next session. And then we have Fed Dali's speech. Dali is the Federal Reserve Bank of San Francisco's president. She is also a member of the FOMC. And of course, whatever she says today will be giving us an insight into the economic outlook, the Fed monetary policy potential decisions, and of course the health situation of the US economy. So we will be looking forward to that speech. It's coming up in about how many hours from now? About 9 to 10 hours from now. So I do encourage us all to mark out this timing so that we can be around to see how the market is going to anticipate and react to this event. Then tomorrow we are also going to be looking at some couple of other speeches too as well. We have Bowman, we have Cook, we have in fact Bowman is having 2 speeches tomorrow. We are looking at Cook too as well, and this will further give us more insight into how to navigate the US dollar market dynamics. So with that information said here, let's dive right into the business. So I see you, Wokocha. Good morning to you. I also see you, Torres Master. Good morning. Okay, it's okay. It happens. We usually miss some opportunities. It happens all the time. But the good news is that the market is still there for us to capitalize on new opportunities. So there are always new opportunities in the market. So if we miss one, it's all fine and good. We wait for the next one. So glad to have you around here, Torres Master. So with that being said, we will be diving right into the charts. And the first asset we are going to be looking at, as usual, is going to be the US Oil Spot. And in fact, I have an interesting trading setup. In fact, I have a position triggered already on the US Oil Spot, and I will be sharing with you in detail what led to me buying the US Oil Spot. And of course, we are also going to be looking at the major drivers that will likely be influencing the sentiment in the market this week. Now, before we go into the technical details, let's run through the market drivers I have for us. In fact, I have 4 of them. And in this market driver, I was able to spool out some major key drivers, collectively shaping the complex landscape for the US crude oil market, and of course, balancing the bullish impact of geopolitical risk and seasonal demand with the bearish influence of a strong US dollar and the Fed's monetary policy outlook. Now, if you look at the market driver on your screen right now, one of the major factors that is likely going to be influencing the sentiment in this market is the geopolitical tensions in the Middle East. Now, the ongoing conflict, particularly the potential for a full-scale war between Israel and Hezbollah, pose a significant threat to crude oil flow from the region, and this could further escalate instability in that area, and the fear that we could witness oil disruption from this area could increase demand for oil, and this might trigger price finding higher highs and higher lows. Then another factor that we will be looking at that could be influencing the sentiment in the market is the summertime oil demand. I talked about this during our previous week, and of course the OPEC Plus and the EIA also took into consideration this factor, as the expectation of increased fuel demand for cooling and traveling during the summer months could also bolster the price of oil. And of course, reports also shows this, and with this one too as well, the path of least resistance is looking very bullish for the crude oil market. Then we also have the potential for a stronger US dollar, though prior to the PMI data on Friday, we were seeing figures showing that inflation is gradually easing in the US economy, and that the potential for an interest rate cut is likely coming anytime soon. And this has further escalated the price of oil, because you know how the US oil spot is related to the US dollar, being a US dollar denominated commodity. And if the US dollar is not doing well, we expect that the US crude oil will continue to rise due to the fact that it becomes cheaper, as other currency assets will find the dollar cheaper enough to buy the US oil spot. However, following the PMI data coming in higher than expected last week Friday, we've seen renewed sentiment in the market leaning towards a potential interest rate cut anytime soon, as the US PMI data is seen as a data that might likely increase inflation due to the positive data, due to the resilient nature of the US economy from that data. Then we also have the Federal Reserve inflation and interest rate cut outlook, which we've talked about several times. And for me, if you would ask me, looking at these major drivers here, the path of least resistance for the US oil spot for me is looking very, very bullish. However, we cannot jump into such conclusion, as we need to see well-informed structures to guide this decision and buttress this idea. And to do this, we would like to have an holistic perspective into this market by scaling up into the higher time frame, where we do intend to understand how the market have digested the implication of this major driver and how and what path they will be taking to continue either the uptrend or dropping to the downside. Now, scaling up here into the higher time frame, I think I started my analysis on the was it on the daily time frame? I guess yes. On the daily time frame here, this is the structure I was able to come up with after taking into consideration the character of price action since the month of February. Now, one thing you would notice here is the fact that ever since price action tested that $86.50 zone here in the month of April, price action had consistently and uniformly found lower lows and lower highs. And as a result of this, we have a beautiful descending trend line to work with. Now, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of selling. Now, the only condition that will make us consider buying is when that descending trend line is breached and broken to the upside. Now, we saw what happened last week. We saw how price broke out of the descending trend line due to the increased bullish momentum. And of course, one of the major factors that influenced the bullish momentum last week was the EIA report, which revealed that there was a significant drawdown in the US crude oil stockpile for the previous week. Now, the implication of a significant drawdown is that it tells us that the demand in the market is so high that the supply was not enough to cater for it. So what they had to do is to go into the stockpile to meet the demand in the market. So what this simply means is that there is high demand, and when there is high demand for an asset or commodity, it is expected that price will continue to rise. So as a result of this, we saw price increase significantly, breaking out of that descending trend line. Then in addition to the descending trend line is our key level, which is going to be playing a significant role in guiding our trading decisions for this week. As you will see, my key level for this week is going to be at the $80.50 level, and look at how beautifully this level served as a key determinant of the direction of price action since the month of March. Now, if we take a closer look at this key level, you will see here it was initially a selling niche in the month of March, and before we saw price break out of the structure mid-month, and then we saw price come back breaking down the structure at the beginning of the month of May. Now, throughout the month of May, price action had traded below the key level, emphasizing the strength of the sellers at this point. However, during last week trading session, we finally saw price climb back above the $80.50 level for the first time in about 2 months, and it has been consolidating somewhere around that area, giving us an insight into how crucial this juncture is. Now, the question as we head into the new week now is whether or not this level, this $80.50 level, will serve as a selling niche one more time to push price to the downside. That's one scenario we're looking at, or the uptrend continuation. Now, considering the fact that based on the market drivers we looked at earlier, that the path of least resistance is looking bullish, what path will price take for this bullish momentum? Are we going to see, especially after considering this impulsive leg, are we going to see price action transition into an uptrend continuation pattern where the breakout of structure will give us opportunities to join the uptrend continuation? Or is it possible that price action will retrace back to retest the descending trend line that was broken previous 2 weeks ago to incite an uptrend continuation? So this is what we are going to be looking at, and our center of focus is going to be around this key level at the $80.50 level, where we do want to see how market participants have been reacting to the structure to determine what our next line of action will be. Now, with the intent of understanding how the market will react to the $80.40 level, I want to quickly show you something I saw on the 4 hours time frame. Now, on the 4 hours time frame, I did acknowledge that supply zone I talked about earlier, which is between the $81.75 and the $80.50 area. Then secondly, after considering the character of price action since the beginning of this month, you will see that the momentum has been bullish. Now, connecting the series of higher lows here, we have an ascending trend line, and you know how we use our ascending trend line. As long as price remains above the ascending trend line, we'll continue to look out for patterns and structures that support the idea of buying. And look at what is going on here. Another set of buying pressure is beginning to surface right above the ascending trend line, which beautifully shares a confluence with the $80.50 level. So the way things are going right now, things are looking much more bullish, so we're going to continue to look out for buying opportunity. And the only condition that will make us sell is for this ascending trend line to be breached, and of course the key level, and then we can start selling selling the USOILSPOT. Now, let's scale down into the 1 hour time frame. Let's see how the market has been reacting to this confluence since the beginning of this week. Now, scaling down into the 1 hour time frame, you will begin to see things more clearly. In fact, the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours of this week, you will see price action was oscillating just around that key level at the $80.50 level to be confined within a range bound structure between the $80.68 level and the $80.20 area. Now, you know how we use our key levels, of course, in this community. When price action falls into a range bound structure, we understand that there is a prevailing uncertainty in the market. Hence, we want to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Mind you, price action is still trading above that ascending trend line we spotted on the higher time frame. Now, like I said, based on the fundamental factors, the path of resistance is looking bullish. So as a result of this, I did add a buy position above the resistance line of that range bound structure at the $80.68 level. And as you will see, I currently have a buy position triggered with about 20 pips running in profit at this point. And for those of you who have been with me for a while and can easily identify this kind of structure, Hello, everyone. So sorry for the break in transmission. We had some technical issues, and we tried as much as possible to resolve all before time. But I'm very grateful and glad that we are back on live, and thank you for everyone behind the scenes who have contacted me for clearance on what is really going on. So, C40, I hope you can see me. Are you still online? I think we just dropped a message on Telegram informing everyone that we are back on. So, should we wait for some couple of minutes um, to see if everyone is, to wait for everyone to be back on, or we just go ahead with our session? And then hopefully they meet us and probably watch the replay of the live session probably at the end of the session. So if you can see me and you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by giving me a feedback as regards to that, and I'll really appreciate it, as it will go a long way to know that we are really back on live. All right, so we have been talking about the US oil spot before the break-in transmission. We went ahead to do a top-down analysis from the higher time frame. We run through the daily, the 4 hours time frame, and of course we are right now on the 1 hour time frame, where we are trying to understand how market participants are behaving around that key level we marked out on the higher time frame. And while I was explaining this, we were able to realize that market has been confined within a range bound structure for about 12 good hours, just exactly around our key level, before we finally saw the breakout of that resistant line. And I did told you that I capitalized on this opportunity. And for those of us who are skilled enough using the basic knowledge you've learned in this community to join this, well done and kudos to you. So at this point, for those of us who already have a buy position triggered, it is advisable that you move your stop losses to break even. Let's secure this position and continue to monitor price action around this area. However, for those of you who are yet to be part of this move and still waiting for opportunities to trade the US oil spot, I would recommend and encourage us all to exercise patience and wait for the market to come back and retest the structure, giving us more opportunity to run the momentum upward. So what I'm simply saying here, let me give a visual representation of what I'm talking about. So what I'm saying here is that if you had missed out on the breakout of the structure, we expect that some point in time price is likely going to come back, do a retest of structure to continue the uptrend. So let's see if that is going to be the case. And if it doesn't happen, then we are going to be looking forward to the breakout retest of the $81.30 level to continue the uptrend move. And of course, I will be with you in the comment section of both my TradingView and Telegram platform to give you an update as at when due, and of course give you structural updates where we can enter and maximize the potential of this bullish move. So this is my simple view on the US oil spot. I hope I made myself clear, and if you have any questions whatsoever, feel free to let me know in the comment section. So at this point in time, we are holding on to a bullish bias right now, and if we are going to consider selling the US oil spot at all, we never can tell. We could see sellers take over the market anytime. The only condition that will make us sell is for this support line at the $80.20 level to be broken to the downside. So unless this level is broken, we are not going to be considering selling the US oil spot. So this is my simple view on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next financial assets on our watch list. So stay tuned in, guys, and you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. See you soon. All right. So I see you, C40. Thank you very much, and I just hope we all can hear me clearly. In the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory enough. So I do hope you marked out those levels accordingly. We are going to be needing them to guide our trading decisions today. So with that being said, let's move on to the next asset on our watch list. Stay tuned. So the next instrument on our watch list this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, for those of you who are with me on my TradingView and Telegram platform, you definitely must have had a buy position triggered at this point in time, and well done, kudos to you on that one. So before I go into the details here, let me emphasize that I will not be taking on the higher time frame. We are not going to be doing a top-down analysis on the GBPUSD, as I already done that during the weekend. I hope you watch my weekend video, and for those of you who are yet to watch it, you can check the link right in the description box below. So it will serve as an educational tool and also give you a background knowledge of how we got to the point we are seeing on the 1 hour time frame right now. So looking at things from a technical standpoint, the first 12 hours of this week was more of a range bound structure, like you will see here. Price action was confined within the 1.26525 and the 1.26300 area, giving us a range bound structure and further detailing the prevailing uncertainty in the market at that point in time. And in addition to that structure is this descending trend line, which appeared to have been broken this morning after price action broke out of that resistance line of that range bound structure, giving us our first buy position for the week. And as you will see, price action, our position is currently running with about 12 pips profit at this point in time. So I'll just encourage us all to move our stop losses to the entry point. Let's secure this position and let's see how the market is going to play out going forward. We may still have a situation where price may come back to retest this trend line. It's still a very possible scenario to continue an uptrend move. So let's take that into consideration. Just in case sellers come in, we are not keen on jumping into any sell positions yet, as price may likely come back, retest the trend line to continue the uptrend move. Now, in as much as we looking out for more buying opportunities in this market, the only condition that will make us sell is for price breaking down the support line. And if it breaks down the support line, we are not jumping in right away, as we want to wait for price action to give us confirmation like a retest of structure and continue selling pressure on the lower time frame. Then we can jump into the sell position. And the reason why I am saying this is simply because of the memory for buying power around this area. We can see what happened here on Friday last week, where it became difficult for sellers to break through that structure. So even despite the strong US PMI data, price was unable to break down that structure. For me, that could be a red flag that buyers are still strong around this area. So if we are going to consider selling the GBPUSD, I would rather want to see a breakdown of the structure happen. That's our signal, and then we wait for price coming back to retest the structure. We could see this on our 5, 10, 15 minutes time frame. Then we can now join a bearish move at that point in time. So that is how we are going to be managing this position today. And of course, if we look at things from a fundamental perspective, the idea of an early interest rate cut following the US PMI data that was released on Friday indicates that we may likely see this could indicate that inflation is probably resurfacing again in the United States, and could incite the idea of keeping interest rate higher for an extended period of time, hereby inciting some selling pressure in this market. But pending the time we see any sign of that one, we'll continue to maintain a bullish bias. Now, the reason why I mentioned that we move all our stop losses accordingly to secure this position, even at 20 pips there, are 90 pips, is it 12 pips thereabouts, is simply because we need to be very cautious at this point in time. And why we need to be cautious is simply because I have a strong feeling that market participants may refrain from placing aggressive directional bets on the GBPUSD, especially when everyone is looking forward to the United Kingdom general election, which is coming up on the 4th of July. So due to this, we may likely see extended sideways trading activity. And in conjunction to that, one is the fact that this week is scanty of any major UK macroeconomic event that could drive price action significantly. So despite the fact that we are in a bullish momentum at this point, we shouldn't get carried away with this momentum, as it may get capped at our key level at the 1.26750 to incite a bearish move. So please, let's be cautious with this, and as soon as price moves significantly in our favor, let's move all stop losses positions accordingly. Of course, I will be giving us updates as at when due on both my TradingView and Telegram platform. So this is my simple view on the GBPUSD this morning. I don't know if you have any questions or you need some further clarifications. Feel free to. So as always, I will take the next 5, 10, 15 seconds off. Let's see if there are any questions before we move on to our final asset on our watch list. And don't forget to give the video a thumbs up. Your likes are valuable to me, and like I said, it's one way of you supporting this community to grow, and thank you very much as you do so. So I will be seeing you in about 10-15 seconds from now. Mark out those levels. You will be needing them accordingly for your trading decisions today. See you soon. All right. So in the absence of no questions, let's move on to the final asset on our watch list. So the next asset we are going to be looking at this morning is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on this asset, we had a buy position triggered early this morning, but after moving stop losses to break even, we got taken out at break even on this one following the recent bearish momentum that we saw at this point. Now, for those of you who were with me on my TradingView and Telegram platform, you definitely must have seen my update this morning as regards to how we are going to be managing this position. Then let me also state here that we will not be going into the higher time frame. I already done a top-down analysis on the XAUUSD, and if you had missed out on my weekend video on this asset, please check the link right in the description box below. Now, with that being said, we are focusing on our execution time frame, which is the 1 hour time frame. Now, after taking into consideration the holistic perspective in this market, looking at things from a technical standpoint on the higher time frame, the path of least resistance is still looking very bullish, considering the fact that price action is still trading above the ascending trend line that has been supporting this momentum in the last couple of months. Now, if we look at the 4 hours time frame, let's look at it together so we can all be on the same page here. Now, if you look at this structure here, you will see that despite the NFP data that came in was it the NFP data that came in a couple of weeks ago, bringing price to the downside here, we saw our price had consistently and uniformly respected higher highs and higher lows, giving us a beautiful ascending channel to work with ahead of the new week. Now, if we take into consideration the fundamental factors behind the scenes, which collectively create a complex trading environment for the gold commodity, as traders balance between the potential for further Fed rate cuts, ongoing geopolitical tensions, key economic data releases, and of course the FOMC member insights into the US dollar market dynamics. You would agree with me that the market may be a little bit indecisive as they wait for more data, especially as we're looking forward to the Fed Reserve official speeches coming up today and tomorrow. And to navigate this current market dynamics, I have a bunch of market drivers that I would like you to also look at and take into consideration while making your informed trading decisions. Now, looking at my screen right now, you will see that, hold on a second, I think I have this one right here. So if you see what is going on my screen right now, I have 4 major market drivers that will be influencing the sentiment in the gold market this week. On top of the list is the Federal Reserve rate cut expectations, which I've been talking about since morning, that despite the Fed's hawkish stance forecast following the interest rate decision last week, remember the Fed chairman Jerome Powell stated that they will be reducing interest rate cut to only 1 cut for this year. However, the data coming out from the U.S. economy and the prior to the event and even after the event were not that impressive, except for the PMI data that came in higher than expected on Friday. So we're still going to be looking forward to more data to further confirm if the Federal Reserve are likely going to cut interest rate. And one of the data we are going to be looking at this week is the GDP, which obviously will be giving us an insight into how much growth the US economy had in the last quarter. Now, this will emphasize if the economy is still resilient or not, and buttressing if interest rate will be cut or not anytime soon. So we are going to be this is going to be a major factor in the market. Then secondly, we are also going to be looking at the geopolitical tension and political uncertainty. Now we learned that Israel is planning to open another war front against the Hezbollah in Lebanon, and that is another escalation there. And we also there's this security pact between the Russian president and the North Korean leader. Then the French economy too as well. There is uncertainty as regards to the political landscape there too as well, which could incite a huge appeal for safe haven assets such as gold. We all know that during geopolitical tensions like this, majority of market participants tend to move their funds from currency assets into safe haven assets. Please hold on a second, please. I will be sorry about the break. I had to sort out some personal things here. So, like I was saying, so we moved on to the US macro data, which everyone is looking forward to, the final quarter 1 GDP print, and of course the personal consumption expenditure coming up later in the week, which will obviously give market participants clues into what is likely going to be happening in the US economy, especially in terms of the Fed interest rate decisions. Then we are going to be looking forward to Fed officials' speeches to this week. In fact, we have a bunch of them, and whatever they say will be giving us an insight into the economic outlook, Fed interest rate decisions, potential Fed interest rate decisions, and the like. So these are the major drivers that will be influencing the sentiment in this market this week. So I just want us to have an insight into what is likely going to be driving the market sentiment. And based on what I'm seeing here, and there's another one that I did not include here, which is the survey from the World Gold Council committee, where they, from the survey they had, we have that asset managers of central banks are projecting that they will be buying more gold for the year 2024. Now, we have an 81% in the survey. This is a very good signal for buyers of the XAUUSD, of the gold commodity. And for me, I still think that the path of least resistance for gold is still looking very bullish, and I will continue to look out for bullish opportunities, especially as long as price action remains above both this support line of the ascending channel and of course the key level at the $2,320 area. So the only condition that will make me consider selling is if the structures are broken to the downside. So as it is right now, the path of least resistance is looking bullish. Price still remains above the structure, and in fact, if we scale down to the 1 hour time frame to look at how the market has been reacting to the support line of that ascending channel, you will see something interesting happen here. Now, looking at the structure closely, you will see that though the week has started on a bullish note, the market started at around the $2,317.50 level, climbed up into the $2,327 area, where we saw some selling pressure resume around that area, giving us a range bound structure to work with. And you know how we use our range bound structure. Whenever we identify them on the chart, we exercise patience and wait for price action to give us a signal of where it wants to go. And what we look out for is either price breaking out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, as it is right now, the market had already broken out of the resistance line, and like I told you, I moved my stop loss to break even, got taken out, and we are going to be positioning ourselves for another re-entry. So what this simply means is that we already have a breakout of structure, as you will see here. Price comes back to retest the structure and even the trend line, so we will be looking at buying above the $2,327.25 level. So let's position ourselves for this uptrend move, and we'll continue to look out for more opportunity to buy if price action goes ahead to break out of the 2,335. And of course, I will be giving us updates as at when due if I see any level that looks promising for us to add more positions so that we can maximize the potential of this bullish move. Now, in as much as things are looking very bullish on this asset, remember, you know how we do it in this community. We also try to keep tabs with the opposite direction as well. As you all know, I talked about various factors behind the scenes where market participants will be looking at to navigate this current market structure. And of course, we have this Fed interest rate decision, which is more or less a key determinant factor of whether or not price will go up or down. So if we are going to be selling the XAUUSD today, I would only want to see price drop below the key level, drop below the ascending trend line, and of course break down the support line of that range bound structure at the $2,317 area. So having a sell stop order below that structure makes a lot of sense, and in fact we could see the privilege of joining if we see any signs of consistent uniform lower lows and lower highs on our lower time frame after price breaks down this ascending trend line. So if we see this something like this, we can actually join earlier than the breakdown of the $2,317.50 level. I doubt if this will happen, but if it does happen, let's be on standby to capitalize on this opportunity. So our center of focus is between that range bound structure, where depending on the direction of the breakout will give us an idea of where price action will be going, at least for the first half of this week. So this is my simple view on the XAUUSD for today. So let's see how the market is going to play out, and of course I will be giving us updates as at when due on both my TradingView and Telegram platform. And that reminds me, we are going to be running the XAUUSD live window later today during the New York session, so you do want to be part of that session. And for those of you who are new with us, who don't know what this is all about, the XAUUSD live window is a platform where we all come together to monitor real-time price action on the XAUUSD, and it usually kickstarts 5 to 10 minutes into the New York session, and it lasts for about 5 to 7 hours depending on the volume of trading activity for that day. So I look forward to seeing you all in the comment section of the XAUUSD live window. The link to the window, immediately after the end of this live session, you will be seeing the link. Click on that link, click on the notify me button so you can get notified as soon as we come on live. So if you have any questions as regards to my illustrations, or you need any clarification whatsoever as regards to the financial market, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we start rounding off today's Forex Morning Mastery session. All right. So in the absence of no further questions, I want to assume that we are all on the same page here. And on the XAUUSD, like I said, I'm still looking forward to more buying opportunities on this asset. So let's be on standby for that one. But if the market does the opposite, we are also ready to capitalize on that opportunity. I see your comment, C40. How are you doing? You said, okay, you're very much welcome. Okay, that's very great. Just keep tuned in. I will always give you updates as at when due of any latest development I see on the chart. So it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you today, though we had some technical issues which hindered some of the flow of the session, but I'm very grateful and glad that we were able to come back on thanks to my team. And let's see how this is going to play out today. So we were able to take on the 3 financial instruments that we are going to be monitoring for this week, which includes the USOILSPOT, the GBPUSD, and my favorite amongst them all, which is the XAUUSD, popularly known as the gold spot. And on all of these assets, as always, we were able to use our basic tools such as the trend lines, key levels, and chart patterns to strategically position ourselves for the next move. So we have simple trading setups that we are going to be using to navigate the market dynamics on this asset. So I do hope you marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do now is exercise patience and wait for the structures to mature. Now, always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So as a result of this understanding, please ensure you have a well-defined risk management strategy in place. Now, for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach and eventually improve on your independent decision making. So I look forward to seeing more of you. Same time Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have performed and of course prepare ourselves for the second half of the week, which promises to bring in some high level of liquidity, and of course we want to be on standby to capitalize on that move. So with that being said, I think we have come to the end, and I want to wish us all the best of luck today, and trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.